Good afternoon, friends. Important video on premise of a reduction in GST rate and two-tier slab 5% and 18%, with 40% slab applicable for sin and luxury goods. So there is a rate reduction. 12% slab is going away, 28% slab is going away. So there are a lot of questions coming from ITC perspective, input tax credit perspective. Like what happened if rate is being reduced, whether my ITC is reduced? What happened if my supply becomes exempted? Do I need to reverse eligible availed ITC? And when inverted duty structure refund would be permissible to me? So there are certain relevant questions which is coming alongside a question that what happened to the stock lying within the supply chain, with the distributor, dealer, retailer, for effective changes in GST rate from 22nd September 2025, but they must be having a stock which is coming to them with the higher GST rate, but now reduced GST rate applicable effective from 22nd September 2025. So we are going to look at the answer as provided by CBIC in recent frequently asked question document issued by them. Let me share my screen. We will discuss all these questions. Look at the question number 6, which is talking about what will happen to the ITC for purchases made before change in GST rate came into effect before 22nd September 25. Will I get ITC at reduced rate now? Answer is very specifically focusing section 16, subsection 1. Registered person can avail ITC provided it is in the course of furtherance of business, subject to restriction and condition as prescribed under section 49. And the reply is well made that if ITC which is availed prior to 22nd September 25, you will be entitled to, and there is no reduction in your ITC because your rate GST rate get reduced post facto 22nd September 2025. Next question is IGST rate have been reduced on outward supply, but they are having this balance in their e-credit ledger, ITC in their e-credit ledger on account of higher rate. Can I continue to use such credit? So they have a ITC ledger which is accumulated on a higher rate, but now their outward supply is being reduced post facto 22nd September 25. So what happened? Can they use their ITC ledger? There is no restriction. They can use such e-credit ledger toward discharging the GST output tax, though now at reduced rate. And they will continue to use the same. Now, ITC ledger can be used in the context of business, not with respect to particular supply. So business aspect is more important. So it can be used provided it is in the course of furtherance of business. So there may be 3-4 different line of business and the same registration number, credit can be cross-utilized. It is not with respect to only one line item, one particular supply. So that's what you can look into. Coming back to the question number 9, and there the question is very interesting and important. What happened if my outward becomes exempted post on or after 22nd September 25? Do I need to reverse ITC which was availed prior to 22nd September? And as per this reply, they are saying that yes, you need to reverse your ITC. And in my humble submission, which was accrued credit to them prior to 22nd September, they have availed when they were entitled to. If they need to reverse, which is a subjective question and under litigation, but reply made need to be reversed. Coming back to the next question, will I be allowed to take refund of accumulated credit arising out of inverted duty structure for supplies affected up to the date of effect of revised rate as notified? So what is the inverted duty structure? In simplistic way, when rate on input is higher comparing the rate on output, so IDS is generated, inverted duty structure is there, accumulation of credit is there, for that refund is permissible. But if you're a trader, so maybe your inward of a particular supply at higher rate, outward going to be at reduce rate post facto 22nd September 2025. Can you take refund under IDS? This was the prominent one. They're saying until 21st September 2025, you can look at IDS scenario and take the refund, but just because of change in rate, IDS is being created, inverted duty structure created. You got a rate on input higher versus rate on output, which is lesser, just because of change in rate. On same on being the same, input and output being same, then you're not entitled to. And they're referring to circular number 135 and saying that in that case, IDS refund will not be permissible. But in my humble submission, it is permissible, and this matter is under litigation. And there are judgment, one or two judgment in favor also, that it does not make any difference whether input and output is same. If there is accumulation because of rate on input is higher comparing the rate on output, refund would be permissible. Question number 11. If I already have stock on the date when rate changes come into effect, should I apply the revised rate? Quite obvious. You may have purchased, let's say 12%, but now it is applicable 5% from 22nd September. Then whatever stock lying with you and you're supplying post 22nd, on or after 22nd September 2025, then you need to apply the reduced rate. So that is what the answer coming out. But here you need to get yourself prepared. What do you need to do? You need to really change the MRP. Corresponding benefit reduction in rate need to be passed on to the consumer. So your MRP sticker need to be changed accordingly as per Legal Metrology Act. So you need to go back and cross-check such supply chain where stock is lying. So either you clear it up by 21st September 2025. Otherwise, if it is carry forward, then such stock, reduced rate applicable, and corresponding compliances means a fixation of MRP reduced, commensurating benefit for the rate reduction to be passed on to the consumer. That is the objective which is being envisaged. Ultimately, consumer must be benefited. So these are the relevant questions which I thought I must draw your attention, which is coming from ITC perspective. So you need to be careful enough and you must cross-check and do the compliances. Get yourself prepared. Thanks for watching. Stay tuned. Thank you very much.